Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, November 16th, 2024. I hope you're doing well. I appreciate you coming to my weekend review podcast. I hope it's going to be helpful for you. And boy, what a week we had, huh? Especially on Friday. Interesting week, really interesting week. Did not have as many profitable trades as I normally have, but unfortunately, that is part of trading. It's not always up, and you got to take the good with the bad. But the key takeaway is when they're bad, trying to keep those as small as possible. So here is the format and what we're going to do today in the podcast. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the trades that I made last week, both current open trades and closed trades. I'm going to talk about why I entered the trade, what the setup was, what the strategy was, what the signals were. We're going to then talk about how I position size correctly based upon the volatility of the market and my account size. I'm going to talk about where I place my emergency stop, where I'm going to place my end of day stop, how I am going to take partial profits each day if the market moves a certain distance from the previous day's close. We're going to talk about trailing stop levels. We're going to talk about serious overhead resistance level of where I want to just exit the trade in full. So I hope it's going to be helpful for you to get an idea of how I view trading, how I look for confluence combinations of indicators at support levels to take my trade, and if I'm correct, having a process to follow that gives me the potential to have a big trade. But if I'm wrong, how I get out and how I get out quickly and try to keep those losses to a minimum. After we go over the trades, I'm going to talk a little bit about trader psychology. Always the most important part of trading is psychological. It's the ability to create a plan and, more importantly, to then follow that plan without letting fear, greed, hope get in the way. When it comes down to it, everyone, in my experience, 29 years of trading, the most important thing is to follow the plan and first have a process and then follow that process. Win or lose, be impatient with your losers, be patient with your winners. So we'll talk about trader psychology. After that, I have gone down through my watch list. And I have identified some potential trades for next week that I am looking for. They're not at the levels they need to be. This is the point in trading where patience really pays off. Looking at the charts, going, okay, Apple, for instance, is here. If it gets down to here, that is an important level because it has this, that, and the other price action or support level at that level. And so, if they were already trades, I probably would have already taken them, but they're not already trades yet. I have to wait for them to get to a level. And if they get there, great, I'll consider taking the trade. If they don't get there, fine, I'll just go on to a different market that does get there. So, being patient and waiting for all these confluences and levels doesn't guarantee that you're going to have a profitable trade. If even if you have the most perfect trade ever, obviously, but it does increase your chances. And everything we do in trading, we need to try to stack the odds in our favor. So, excuse my voice, a little under the weather this weekend, but I am going to Colombia tomorrow. I'm going to go there for visit my girlfriend. I'm really excited. It's snowing here today, and so looking forward to heading into some warmer weather. And that's the nice thing about trading. You can do it anywhere. So we'll go down through, and usually I go on the dailies and the weeklies, but I didn't find anything on the weeklies at all that I was interested in. But I do have 12 different symbols on the daily time frame that I'm interested in potentially taking next week. All right, so let's get this U.S. legal disclaimer out of the way, and then we'll get started. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, well, let's get started with Verizon. So on this first position, I'll spend a little bit more time, talk about the position sizing, the stops in detail. And then as we go through the other positions, I won't spend quite as much time, just so you know. So Verizon, I did buy Verizon here on the 12th of November. Why? This is what is called a deep dip buy strategy. A deep dip buy consists of using either the 200-day moving average, which is the black line, the 250-day moving average, which is the purple line, or the 300-day moving average, which is the orange line, and or the 30 RSI. So on the day that I bought it here on the 12th of November, we had what was called the bounce at the 200-day moving average. 200-day moving average is a key moving average that large financial institutions, tradie, and savvy traders key their trades off of. And on the day that I purchased it, and I purchased it here at $40.38, buyers came in immediately at the 200-day moving average. So a deep dip buy, you can have a bounce like this, or an intraday rejection, which means it goes below during the day and then closes back above, because I base everything on closing prices when it comes to this strategy. Or it could close underneath and then close back above. But my line in the sand is this black line, the 200-day moving average on a closing basis. So the signal, like I just mentioned, was the bounce at the 200-day moving average. Now, when I have a signal like this, the very important thing is, how do I position size based upon the volatility of the market and my account size? So let's just say I have a $100,000 account size. I take 1% of that. 1% of 100,000 is $1,000. If I had a $50,000 trading account, it would be $500. If it was $200,000 trading account, it would be $2,000, and so forth. So let's just say it was a $100,000 trading account. 1% of 100,000 is $1,000. I take my $1,000, I divide it by the value of the 2 ATR. The 2 ATR right now is $1.72. This is the number that you use that tells you how much volatility. If the higher the volatility, the larger this number is going to be. The smaller the volatility, the lower this number is going to be. And so the higher volatility, if it's higher, I'm going to buy less shares. So $100,000 trading account, 1% of that is $1,000 divided by $1.72 tells me to buy 581 shares. So I have the signal, the bounce at the 200-day moving average. I get long at $4.38. I then place my emergency stop exactly $1.72 below. So if I have 581 shares and it moves $1.72, then my worst case scenario on this trade is going to be $1,000. But the good news is this only happens about 5% of the time. 95% of the time, if you have a losing trade, it will be because of your end of bar stop. Well, the reason I took the trade was the bounce at the 200-day moving average. So therefore, the next day, had it closed below the 200, even by a penny, I would have simply gotten out of the trade. So 95% of the time, your end of bar stop is going to get you out for a loss. 5% of the time, your maximum loss will be hit. All right. So the signal was the bounce at the 200-day moving average. I position size, like I just showed you. I placed my emergency stop 2 ATRs below. I placed my end of bar stop any close below the 200-day moving average. Now, the next thing I do once I enter is I designate my trailing stop level. My trailing stop level is exactly 1.5 ATRs above my entry. And if I get to this level, now I'm going to tighten up my stop and go into trailing stop mode. Okay, so The position sizing, the emergency stop, the end of bar stop, the trailing stop level, this is all considered defensive moves. But I also want to do offensive in my trading. I don't want to just trade defensively. I want to trade offensively too. And what that means is that I am going to take partial profits into strength. Not everything, partial, 10% of the remaining shares that I have at each profit target. So I'll show you exactly how I'm going to do that because this is a real trade, and we'll set this for Monday. What I do is I take the closing price. Right now that's $41.65, and I'm going to add the value of the 0.45 to it. The 0.45 right now is 39 cents. It changes every day, so whatever the reading is on the day. So 41.65, which is the closing price, plus 39 cents. My first profit target on Monday is going to be 42.04. Then I'm going to take 42.04, which is my first profit target. I'm going to add the 0.45 to it again, plus 0.39. My second profit target on Monday is going to be 42.43. And I'm going to do it one more time. I'm going to take the second profit target, 42.43, plus 0.39. My third profit target is going to be 42.82. So those are my 3 profit targets for Monday. And then after Monday comes, if it goes up and I hit 1 or hit 2, I take off 10% of the remaining shares that I have. If it goes down, well, obviously I don't get any profit targets. And then the next day, I have to reconfigure the profit targets. All right. So that is how I take partial profits. I do it. I change it. I put 3 limit orders in for the next day for 10% of my position at those 3 profit targets. So with that being said, just review of the trade again. Bounce at the 200-day moving average for the deep dip buy. Position size correctly. Emergency stop 2 ATRs below. End of bar stop. Close below the 200. Put my trailing stop level 1.5 ATRs above. Next day takes right on off. And I hit a profit target. Right? I hit a profit target. Actually 2 profit targets. Hit 2 profit targets on that day. So all of a sudden, I'm reducing my position size, locking in the profits because the market gave it to me. I'm a big fan of taking a little bit of profit when the market gives me something. Nothing worse than to go all the way up and then come all the way back down on you and you didn't take anything. One of my weekly trades, a little later in the podcast, Adobe, you'll see how important it was that I took profit targets. So the next day again, after I entered, moved up nicely, took some profits. Next day, nothing, just sideways, no profit targets, down a little bit. And then on Friday, up again nicely, and I hit another 2 profit targets. So I'm taking off the position as it moves my way. Now, in addition to taking off the 2 profit targets on Friday, I also got to trailing stop level. So now I'm in trailing stop mode. Doesn't mean I do anything. It's just that I'm in trailing stop mode, which means if I have a close below a previous bar's low from here on out, I'll take off half of the remaining shares that I have. All right. So this particular trade on this deep dip buy, doing nicely, was nice. It was nice to have this up on Friday with the rest of the market down. I'll tell you that. And I've been having problems with my mouse here, everybody. Sorry. So far, 3-day trade up 3.1%. So pretty good, pretty good. And that was a deep dip buy on Verizon. Okay, Tesla. Okay, Tesla is a short, and you can see I have this red box here. This is called an abandoned baby. Why abandoned baby? Well, the previous day we gapped up. Everything was exciting. The news was good. It gapped up. But right away, the next day, it gapped down. So if you have a gap up and a gap and followed right by a gap down, that is called an abandoned baby. This is a bearish signal. Abandoned babies, island reversals, one of my favorite approaches. I have a lot of them that I'm going to show you today. If you'd like to learn more about them, just go to my YouTube channel. In the lessons playlist, you'll see why abandoned babies and island reversals are some of my favorite new setups. So I could have taken the trade as soon as it um, triggered the abandoned baby, but what I like to do is I like to have the abandoned baby happen, and then when we come back up to the bottom of the abandoned baby, that's where I want to enter. And if it's a bullish abandoned baby, it's the same thing. So he created the abandoned baby. Next day, did exactly that. Got right to the bottom of the abandoned baby. I got short 336 even. Now on these type of positions, I don't take partial profits. This is the only strategy where I change my profit and my risk parameters. And what I do is I position size exactly the same, 1% of my capital, divide by the value of the 2 ATR. Right now, the value of the 2 ATR is 35.32. So what I do is I place a 2 ATR stop above, and then my profit target is double that, 4 ATRs to the downside. And in my experience, about 70% of the time, when you have an abandoned baby, I reach my 4 ATR profit target. 30% of the time, I hit my stop. And so right now, you can see up 3.02% so far, but this is a set it and forget it. So again, I'm gonna risk 2 ATRs. I'm not gonna do anything, sooner or later, one of two things is going to happen. One, I'm going to hit my 2 ATR stop, or two, I'm going to hit my 4 ATR profit target. But so far, so good, up 3.02% on the bearish abandoned baby. TLT. Okay. I did enter TLT on Friday here at $90 even. And why did I take this trade? Well, there's a couple reasons I took this trade. The first reason is you can see this green box here. I'm going all the way back to this low here on the 29th of May. This is called a bullish order block. I know it doesn't look very bullish, but it's your lowest low close before you change structure to the upside. And this particular strategy, when I use it and when I teach it, it takes a little bit more time to explain. But this is your lowest low close before the market shows you that it wanted to go up by breaking structure to the upside. And so you can see it certainly worked. It certainly did go up. But now we have come back into this order block. And I really like order blocks. They're a little tough to buy because it certainly doesn't look like anything good's going on right now with bonds, does it? But this is a support area. And in addition to testing, you can see back here on the 6th, see how we just tested it and bounced? And then on Friday, we got right to it and bounced. So far, it is respecting that order block. In addition to that, big picture, we have what is called the double bottom and a bullish MACD divergence. Look at these lows here. Look how deep these red bars are. These red bars, MACD bars, are showing momentum. You have momentum to the downside. That's why these just keep getting deeper and deeper and deeper, the red bars. Well, now it's starting to change. Now we had a little bit of rally. We got some green MACD. But now look, these bars here are certainly lower than these bars over here, right? But do you see how even though we're much lower, look at this red here. This red is very shallow compared to this deep red over here. What this means is that the momentum to the downside is slowing, by, as evidenced by this double bottom bullish MACD divergence. And if the the downwards momentum is slowing, what that really means, you're kind of starting to run out of buyers. And if you run out of buyers, the implication is you are going to go up. I studied one-on-one with Dr. Alexander Elder. He taught me this. And what I do is I take that and then I dovetail it into the other strategies that I use. And so we'll see. I don't know if this is going to be a profitable trade or not, but I do have a double bottom bullish MACD divergence. I do have a bullish order block here. So I took the trade on Friday at $90. I placed my emergency stop, of course, 2 ATRs below as always, and my end of bar stop is simply going to be a close below the low of that order block way back in, what do we say it was? March. And so, and that is going to be a close below 88.68. All right. And then, of course, I have my trailing stop level up here at $92. That's 1.5 ATRs above. So that's the trade. It's important in trading that you know exactly what you're going to do regardless of what the market does. And I know exactly what I'm going to do. If it goes up, I'm going to take partial profits. If it gets to my trailing stop level, I'll go into trailing stop mode. If it keeps going up, I'll take partial profits. If it goes down and closes below 88.68, I'm simply going to get out of the trade. If it crashes down and goes down to 87.40, I'm going to have to get out of the entire position there because my maximum loss has been hit. So this trade is up a little bit, not much. Let's see. Let's just call it even. I mean, it's up 9 cents on the trade, but it's too close for right here to measure. So basically just call it even, but that is the trade that I took on Friday. So those are the open trades. Let's go to the closed trades. I had a lot of closed trades. The market going down got me out of a lot of positions on Friday and days before that. But you know, it's okay to have losing trades, everybody. You're going to have them. But the key is, are you trying to keep your losses small? And you will see that had I not adhered to my stops, things would have been a lot worse. So here is Boeing. I entered Boeing on the 6th of November. Why? Well, here's an order block. It's the green box, the bullish order block. During that day, we went down. We tested the long-term trend line. We also tested the bottom of the order block. I got long here, 147.20. Placed my position size correctly. I placed my emergency stop 2 ATRs below. My end of bar stop is a close below the order block, just like I showed you on bonds. Next day, it did move up, thankfully, because I did take some partial profits and reduced my position, locked in some profits and reduced my positions. Then we had an inside bar, then we had a down bar, and then here on the 12th of November, we closed below the low of the order block. I had to get out of the trade for a loss of 1.49%, but it wasn't quite 1.49%, right? Because I did take some profits on that day that it moved up. And so you can see how that's important. It reduced the loss a little bit, right? Because I had fewer shares. I made money on a little bit of shares and reduced the shares before it came down. So I got out for a loss of 1.49, but if I would have held on to the trade, look, down, 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 a little bit up on Friday. But thankfully, you know, it's never fun to get out for a loss, but if it keeps going down after you get out, it always feels better, right? So on Boeing here, a loss of 1.49%. INDA. Okay, this is definitely a loss. I got in back on the 28th of October at 55.16 on a bullish abandon baby. We gap down, followed by a gap up. I placed my 2 ATR stop below, my 4 ATR profit target above, and this one was one of the 30% where it did not work. So you can see here on the 12th, it actually gapped below my stop, so I lost a little bit more. So kind of a bummer on this one, but again, good thing I adhered to my stop and got out when I was supposed to, because I would have had a much larger loss. I got out for a loss of 2.24, and then you can see it's much lower from there. So that was a loss. So yeah, this was kind of a tough week with losses, but also good teaching moment to show that had I not got out of my positions, it would have ended up much worse. So okay, here's FedEx. FedEx is a deep dip buy. I did get into FedEx on the 15th of October. Deep dip buy, under 200, over 200, came back a little. I got long 266.40, placed my emergency stop 2 ATRs below, placed my trailing stop level up here 227.40. next day, took right off for me, took some profits. Next day, moved up again, took some profits. Then nothing. Then we came down for a little bit, no profit targets. Then we opened up big here, took some more profits, also in trailing stop mode, which means now that if I have a close below a previous bar's low, I will get out of half. Then we kind of move sideways. And then here on the 4th of November, we had our first close below a previous bar's low. I took off half of the remaining shares that I had for a gain of 2.09%. And then we went straight up, which was nice because I still have half the position. Moved up, took some profits. 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 Now here on the 11th, 11/11, we went above the 70 RSI and then closed below the 70 RSI. I have a rule. If that happens, then I take another half of the remaining shares I have off. I did that, and the those particular oh, those particular shares, nice gain on that one. Gain of 8.68%. And then I have another rule that if I have a rejection of the 70 RSI, I get out of half, but then the next day we close below previous bar's low after rejecting the 70 RSI. That got me completely out of the trade. And so I am completely out of the trade. And that last amount that I got out there was for a gain of 7.21%. So really good example of just a simple deep dip buy, but there's rules, right? There's rules. There's the trailing stop rules, getting out of half, there's taking profits into the strength, and then the rejection of the 70 RSI and the close below the previous bar's low after rejecting the 70 RSI. But look, this was a really nice trade. 8.68%, 7.21%, and 2.09%. But the key is that I just had a process that I followed with rules because you never really know what's going to happen. All you can do is all you can do is follow your process. And so, if you don't have a process, if you don't have a trading plan, trading process, just to let you know, I do teach private one-on-one lessons in the evening time. I've been teaching for many years. I've taught people from all over the world, from absolute beginners all the way up to the hedge fund level. In my course, I teach 7 different trading approaches. I teach my students step by step how to trade each single strategy. By the time you're done with the course, you will know these strategies like the back of your hand. I know when I'm just showing you here, it may sound complicated, but it's not. And, in the course, not only do I teach you, but you have to prove to me that you know it. We do all sorts of simulation trades. We take random markets, random time frames. You're the one that's telling me, okay, we're getting in here, Greg. We're doing this now, Greg. And if you're right, I'll say absolutely correct. If not, well, then I'll say no because of this, that, or the other. But it's a great skill to learn. You can do it anywhere. I love to teach. I know you're going to learn a lot. So generally what I do, my email is in the link in the description. Just send me an email. We'll have a Skype call. It's a free Skype call. Just get to know each other a little bit better. Want to learn more about you and your trading challenges. Then you can ask me any questions about, the format of the course. And when we're done with the call, that's it. It's not a sales call, I promise. When we're done with the call, think about it as long as you want. And one day if you decide, hey, I want to do this with Greg, just email me back and we'll start. But it's a great course. And I've had so many people from around the world tell me, Greg, I'm just so glad I took that course. It's really changed my trading. So here we go. FedEx, 2 exits, one for 8.68% and one for plus 7.21%. So good trade on FedEx, especially with that crazy week. Rio, again, a really good example, everyone, of why it's important to take partial profits when you have them, why it's important to have a strategy. So I got long Rio back here at 64.69, deep dip buy, intraday rejection of the 200-day moving average, place my emergency stop 2 ATRs below, place my 1.5 ATR trailing stop level above. After I bought it, next day didn't do much. Next day went up, took some profits. Next day went up, took some profits. Next day went up, took some profits, which of course is very important. Next day we had a close below a previous bar's low after reaching trailing stop level. I sold half of the full shares that I had remaining for a gain of 2.17%. And then we kind of moved around here. We had this huge move up here, thankfully, because I hit 3 profit targets on that day. And I'd already sold half of the shares here. And then from there, down. So am I glad that I took partial profits? Am I glad that I had a process where I took half and I sold into strength? You bet. Because on the remaining shares that I had a loss of 3.21%. But did I lose 3.21% on the trade? No, I made money on the trade because of the taking partial profits and the selling half and the selling into strength. I still made money on this trade, even though the remaining shares I lost 3.21%. And am I glad that I got out there? Well, yeah, because it kept on going down. So, you know, when I show you a loss, generally it's, unless it just happens all at once, the loss is not going to be as much because I have taken partial profits. That's why these rules that I have are so important. But the remaining shares down 3.21% on Rio. And then XLV, another good example of this, everyone. Okay, I got long XLV here at 147.87. Combination of signals, V1, close under, close over the 200-day moving average, so a deep dip buy. Got long 147.87, emergency stop, 2 ATRs below, trailing stop at 150.42. Next day, huge gap up. Great start to the trade. Why? Because I took off 3 profit targets at the open. Next day down, next day up, took some profits there. And then here on the 12th, I had a close below the 200-day, which got me out of the trade. Remaining shares for a loss of 0.32%, but I made money on the trade because of the partial profits that I took. And in addition to that, am I glad I got out of the trade? Holy smokes, yes. Look at this. Just fell off a cliff. So I know a lot of time you get out and then it goes right back up. You're like, dang, I knew I should have stayed in, blah, blah, blah. Just get rid of that kind of thinking. If it closes below, just get out. If it goes back up, you can always get back in. So very, very small loss here. But again, it wasn't a loss. It was a gain because of taking the partial profits and following the rules. And thank goodness I got out. I know my voice is bad today, everyone. I apologize. Doing my best. So I hope you can understand me. So I believe those are, yeah, so those are all the dailies. Just to recap, open position Verizon up 3.1%. Tesla open position short up 3.02%. Open position TLT just about even. I got that on Friday. Closed position Boeing loss of 1.49%. Closed position INDA loss of 2.24%. FedEx closed position got out of 2 trades this week, one for a gain of 8.66%, one for a gain of 7.21%. Out of that, Rio loss of 3.21%, and XLV loss of 0.32%. So all in all, pretty good, especially on a week like this. So, okay, those are the dailies. Let's go to the 2 weeklies. And the 2 weeklies, weekly bars close on Friday. I did enter the trade on the 8th, last Friday, not last Friday, but the Friday before, at 494.68. Just a deep dip buy with the V2. Close under, close over the 200, plus you have a V2 here, bar 1, 2, 3. 2 goes under 1, 3 closes above bar 1's close. So as soon as I bought this, it just took on off. Look, in 1 week, it got to my trailing stop level, which was great because I hit 3 profit targets this week on the way up with my limit orders that we talk about. So right now, currently, the remaining shares I have up 1.83%, but better than that again because I hit 1 profit target about here, 1 here, and 1 right at the top. So I only have 70% of this position left because I hit 3 profit targets. So the remaining shares up 1.83%. And I'm in trailing stop mode, which is crazy. So if I get a close below previous bar's low, I have to get out of half, but we'll see. But um, you look at Friday. Friday was down big, 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 but got the jump on it. So this is up 1.83%. And then Disney. Okay, I am out of Disney. I did get into Disney all the way back here, August 9th. Why? Again, deep dip buy, under 30, over 30. Got long here, 85.90. Placed my emergency stop 2 ATRs below. My end of week stop here, 82.95. Trailing stop bubble, 1.5 ATRs above. Next week takes off, took some profits, didn't do much for a month, moved back up here, hit some profit targets. Next month or next week moved up, hit some profit targets. And on this week here, hit some profit targets. But I did get out of Disney this week at 102.60. It's 115.07. Why did I get out there? Well, I never hold through earnings, everyone, and you can see I got out here. This is on the daily at 102.60 before earnings. Sometimes earnings, when they come out, go way down. You're really glad you got out. Sometimes you get out because you're following your rules and then it skyrockets. That's how it goes. And this one, it skyrocketed. So anyway, really good trade. I've been in Disney for quite a long time, several months, but I did exit the trade for a gain of, where is my, oh, there we go. Okay, my mouse is possessed. I'm starting to come to this conclusion. Really nice gain here on Disney of 16.3%. Okay, so those were the current open and closed trades. Well, I guess just recap on the weekly. Adobe up 1.83%, currently in it, and then exited Disney for a gain of 16.3%. So let's talk a little bit about trader psychology before we start moving on to the potential trades for next week. This is from Steve Burns, my good friend, mentor, great author, great trader. You can follow him at @SJosephBurns on Twitter, X, or you can check out his books on Amazon. He has a lot of great trading books. But let's see what Steve has to say here. Trading is not the path to free money. Boy, that's true. Profits must be earned through homework, discipline, courage, patience, and perseverance in the markets. Really, what he's saying here, you need to have a process and then follow that process. Homework. Okay, well, we're doing homework right now, right? Well, we're going to get to homework in a minute when I go through the potential trades for next week. But what I did last night when I went through all the charts and said, okay, this, if this stock gets to here, that would be an interesting place to consider taking a trade. That's homework. So I did homework last night. Discipline. Well, discipline's discipline. Me getting out of those trades when I was supposed to last week, even though it wasn't fun to get out of losing trades, I got out of them, and thank goodness I did, because they kept going down. But discipline is hugely important, everyone. You can have the best plan in the world, but if you don't follow it, what good is it? You need to have discipline. So you need to have homework, do your study, look for the levels that you're looking for, then have the discipline to make the trade, follow the plan. Courage, sure, you need courage. I mean, anytime you put money at risk, you got to be able to have enough courage to put that money at risk, right? Patience, patient, waiting for your market to get to the level that you want, and perseverance. Perseverance, you could trade perfectly for 2 months, have the best setups in the world, but they may not work. Well, you got to have the perseverance to be able to keep going until the market turns your way. And then that goes back into money management, that goes back into position sizing correctly, because, if you have a month down or 2 month down, you have to position size correctly so that you still have money left because no matter how good the trade, that can go against you. You can just step into it just at the wrong time, and for 2 months, it's horrible. Well, you need to be able to outlast that 2 months until the market and trading starts picking up for you. So thank you very much, Steve. Appreciate that. Hope that's helpful for everyone. And now let's get over to the potential trades for next week and see what they're telling us. Okay, so these are the potential setups for next week that I am looking for. Now, I mention this each weekend, but look, I have 12 symbols here. It's possible that all 12 of these could trigger all on the same day. Does that mean I'm going to take all 12 of the positions? No, I have a rule. I only take one trade per day. So on Monday, these could all trigger. I'm going to have to narrow it down to the best one. So how do I do that? Well, I take a lot of things into account. How many signals did they have? And I kind of give a point. It's like a report card. I give a point for everything they have. So if Apple has one signal and AGQ has two signals, well, then obviously I'd probably take AGQ. So I look at how many confluences, combinations, entry signals does each market have? What's the risk to reward ratio compared to one market to the other market? How does it look on a higher time frame? I also factor in looking at the higher time frame. That helps me make the decision. If I'm trading dailies, I look at the weeklies, and maybe the dailies look on two different stocks look exactly the same, but if I look at the weekly may look better on one than the other, and then that helps me decide. And then relative market strength. If the market's way down, but one stock's up and the other's way down, I'm probably going to go with the one that has the better market strength, the higher relative strength or relative weakness if I'm looking for a short. So these are all the things that I teach my students is, if you have 5 entries, legit entries, how do you narrow it down to the best one? But this is what I teach in my one-on-one course. The devil's in the details when it comes to trading, everybody. And that's why I think it's such a good course, because you get so much instruction. It's one-on-one. It's you and me. It's 15 hours. So we spend a lot of time together. There's 5 sessions. Each session is 3 hours. So we spend 15 hours together running simulations, learning the rules. I mean, when you're done, like I said, you're going to be a much better trader, and you're going to know how to differentiate between multiple signals. So do yourself a favor, send me an email, let's talk, and I would love for you to be my student. You're going to learn a lot. So here is Apple. Okay, so on Apple here, I have this red box. This red box is what is called a bearish order block. This is the highest bar close before market structure change. If you change structure from a bullish structure to a bearish structure, the way that I look at it is I want to short rallies. If I change structure from a bearish market structure to a bullish market structure, I want to buy dips. So right now, Apple is in a bearish market structure. Therefore, I want to short rallies. Well, the place to short Apple would be somewhere here in this red box, anywhere between 234.47, 232.29 in this box here. Now, if it moves up, rejects the bottom of the order block, I may take it there. If it doesn't reject and goes higher and has some kind of reversal in the middle of the order block, I may take the short there. If it just keeps going, takes out the high of the order block, rejects that there, then I may short there. So with order blocks, fair value gaps, it's not an exact line. There's some thinking to it, and there's some looking for the price action and see what happens. So, but big picture here, I am looking to potentially short Apple somewhere between 234.47 and 232.29. And it may get there, and I may not take it because one of my other ones may look better, right? So we'll just have to see. But I am looking to potentially short Apple next week if it goes higher. Don't know if it will go higher. 234.47 to 232.29. AGQ. All right. Well, AGQ, I had a really good short trade on this, again, with the abandoned babies right up here. Been watching the show, you remember, but look, we gapped up, we gapped down, abandoned baby, got to the bottom of the abandoned baby, and then straight down. And I did get that trade. It was a double-digit trade. Oh, I think it was 21%. But now I am looking to the long side. I am looking here at the 200-day moving average, the black line. Look in the past. Did it respect it last time? It certainly did. Did it respect it here? It certainly did. Is it going to come down and touch? Well, it's certainly possible. Will it hold this time? I don't know. I don't know if it will hold or not. But if it does come down and bounce at the 200-day moving average, give me a good risk to reward ratio, I will definitely consider getting long AGQ. Silver AGQ in this case is extremely oversold. So we'll see if it continues down, if it gets to an important level, which is the 200-day moving average. Amazon, AMZN. Okay, well, Amazon did something interesting on Friday. It changed market structure to the downside. Look at this high. We made a high, we had a little pullback, we made a higher high, and then look what happened on Friday. Friday, we took out the swing low in the middle. This changes the market structure of Amazon from bullish to bearish. And therefore, if it's changed from bullish to bearish, I want to short rallies. I want to short rallies back to the bottom of the order block. So a short on Amazon somewhere between 214.10, no, I'm sorry, 215.09 and 209.14. So from 215.09 to 209.14, anywhere in this area here, what I'm really looking for is the bottom of the order block. 208.70 is the bottom of the order block. So if we were to, next week, if we were to go back up into this and reject it, I would probably short it here because this move down, most likely the first move down gets bought and then moves back up, but it's going to have a hard time with the bottom of this order block most likely. So I am looking for potential short on Amazon because the change in market structure that happened on Friday. Alibaba. Oof, look at this. Straight up and straight down. So this is a good example of being very patient. Look, here's the 200-day moving average down here. It's still a fair bit of a ways down here. I don't know if it's going to get there or not. I really don't know if it's going to get there. But if it does get down there and gives me a good risk to reward and a rejection of the 200-day moving average, I will consider taking the trade. But again, I don't know if it will get there, but it's up to me. That's my perfect spot. If it gets there, then I consider it. If it just heads back up, great. So that's what I'm looking for there. Budweiser, wow. Look up here. Gap up, gap down. Bearish abandoned baby. Was it right? I would say. Well, now we have the opposite. We had a gap down, gap up. Is it going to be the bottom? I don't know. But we did have an abandoned baby. Gap down, gap up. Remember, if you have a gap down, gap up, then the top of that baby there, 55.90, that would be the support level after the abandoned baby. So I would consider getting long next week on Budweiser 55.90. If I did, two ATR emergency stop, 4 ATR profit target. Caterpillar, okay, Caterpillar, this is an island reversal. Gapped way up, followed by a gap down. Again, when that happens, more likely in the future, you look, it's going to be lower. And it already is lower. But if we do rally back up to the bottom of that island reversal, 404.10, I would consider getting short there. 2 ATR profit target, 2 ATR stop, 4 ATR profit target. Etsy, ETSY. Okay, this is a bullish order block. Lowest bar close before market structure change. So market structure change, we are in an uptrend still. So I want to buy potential moves back down to the order block. I would be potentially looking to buy Etsy somewhere between 48.75 and 47.43, somewhere in this green box. GDX, which is gold miners. Boy, we had quite a run and now quite a sell-off, but we are down to important levels here. The two important levels, this is a deep dip buy. One would be a rejection of the 200, which already happened on Thursday. I didn't take the trade. We're at a 29.13 RSI. So one of two things could potentially get me in this trade. One is if we close back above 30 RSI. Two is if we go under the 200 and then close back above. You can see we're starting to form a little bit of support here. So if it goes higher and closes back above 30, I would consider getting long there. Or if it goes lower under the 200 and then closes back above, I would consider getting long there. The best thing it could do is go under the 200-day moving average, close back over the 200-day moving average, and close above the 30 RSI, because a combination of a rejection of a 200-day moving average and a 30 RSI, that is a strong deep dip buy signal. And speaking of deep dip buys, of course, in my one-on-one course, I teach that to my one-on-one students, obviously, in addition to the other 6 trading strategies that I use. But I also have a really good video course available at udemy.com. The link's in the description, where I teach you the deep dip buy through a video course. It's affordable. It's between $30 and $50. It's 9.5 hours of video. It's a great course. I've sold so many of them around the world, and I think I have a 4.8 or 4.9 star on that course. It's a great way to get started. So if you're interested in watching that video or that video course on Udemy, the link is in this YouTube video description. So yeah, we're at some key levels here on GDX, but like I said, what I'm really looking for is a washout of that 200, move back up, and also a close above 30, which would be great. GLD gold, okay, another deep dip buy, not at the 200, but there is a really good confluence of an under 30, over 30 at the same time you reject the 100-day moving average, which is the red line here. So I'll watch this carefully next week, but if I go under the 100 and then back over, and also under the 30 RSI and then back over, that's very similar to what I just showed you on the gold miners, going under 200, over 200, and under 30, over 30 RSI. That's one of the best signals you can get, and we're getting very close to that on gold here. Under 100, over 100, under 30, over 30. Qs. Okay, so you can see the red block here. This is an island reversal. Look, we gapped up, we had multiple days sideways, and then we gapped down, leaving this. This is a very bearish signal, everyone, for the markets in general. So what I am looking for, potential short trade, if we go back up to the bottom of the island reversal, just like going up to the bottom of the abandoned baby. If we got back up here to 507.50, I would consider getting short the markets, because in my experience here, the market structure has changed to the downside. Yes, we may get a rally, an initial bounce, but if we rally back up, then I think we'll have a leg back down. Could be completely wrong. Could go to new highs. I don't know. But that's what this is telling me here. To the downside, however, we have this long-term trend line. Here's the lows here. Here's the lows here. We will probably find some type of support about $3 lower on the Qs because of that long-term trend line. So we'll see if that happens. I don't think I'll be buying that. What I'm looking for would be a short if we get up to the bottom of this island reversal at 507.50. SPY, same thing, gapped up, sideways, gapped down. So support on SPY down here about 575. But again, I would consider possibly buying that if we reject the 50 RSI or 50 SMA. Because that dovetails with this long-term trend line. But if we rally back up, if we have a knee-jerk rally back up to the bottom of this island reversal, 592.30, I may consider getting short there. And then last but not least, Walgreens. So Walgreens, this is a bullish order block in the green area. We have the big down move. This is the lowest low close before market structure change. So therefore, this is most likely the area that it will bounce. I am looking at the price of $8.36. It's right smack dab in the middle of the bullish order block, and it's right at halfway of this big down bar. My stop would just simply be a close below the low of the order block a close below the low of 822. And of course, I would have my emergency stop there as well. But we are in a bull. I know this looks horrible, but we are in a bullish order block. Halfway of that bar should add some type of support. And if it does get to 836, then my stop is simply a close below 822. So it's a really good risk to reward ratio for sure. So anyway, I hope that was helpful today, everyone. I hope you found some value in it. If you did, I really would appreciate it if you could hit the thumbs up button. It really helps out the channel, lets YouTube know there's some valuable content here. And subscribe if you haven't subscribed as well. And then I will be doing next week, God willing. Hopefully I make it, but I will be traveling to Colombia tomorrow, and I will be doing the podcast from Colombia next week. So I hope you have a good week. Try to go out and do something nice for somebody today. If you could also try to do something nice for an animal, that would be great as well. And it would just be a better place if we all did something nice for everyone each day, right? So I appreciate you being here. I hope you have a good rest of your weekend. If you have any comments or questions about anything, just leave them in the comments section. I'll do my best to get back. But enjoy the rest of your weekend, everybody, and thanks for coming. Appreciate you spending the time here and hope you found it helpful. Bye-bye.
U.S. Government disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.